Everyone always says that to fix your credit, you need to be more responsible. Fine, but nobody actually tells you what to go fix on your credit report so your score can actually start working for you. Well, thankfully, that's why you follow me for all of the daily credit tips. And in today's video, I'm going to reveal for you the 6 most important credit repair moves to focus on so that you can actually boost your score. And stick around to the end because that's where I'm going to give you the one move that can raise your approval odds the fastest. For every single move, we're going to go over what it is, why you need it, how to use it, how many points you could expect to gain from it, and of course, mistakes to avoid. Alright, move number 1, pulling all 3 credit reports. What is it? It's reviewing your Equifax, Experian, and TransUnion reports so you can actually see what is helping you and what is hurting you. Why do we need it? The purpose of pulling your credit reports is very simple. You cannot fix what you haven't actually looked at. You see, part of repairing your credit is avoiding blind mistakes. I know, duh. But the reality is, most people are trying to improve their score without even knowing which accounts are reporting late, which balances are too high, or which collections are still sitting there. If you don't have that visibility, every single month you're going to be guessing, and you're just constantly on this hamster wheel, spinning at the bottom, disputing random things, paying random balances, and never actually making progress. Instead, however, if you pulled all 3 reports and reviewed them line by line, an error here, an outdated account there, it's not going to sit on your file forever without you catching it. How to use it? Credit reports, for the most part, are easy to access. I would recommend that you pull all 3 bureaus, review personal information, late payments, collections, balances, and inquiries. And I would recommend if the full report feels overwhelming. Start as quickly as you can with the first 5 problem accounts and then progress from there. How many points could you expect to gain from pulling your reports? By itself, pulling your reports does not raise your score. But let's assume you find 1 collection that should not be there, 2 cards maxed out, and 1 late payment reporting incorrectly. Fixing just those problems can easily mean the difference between sitting in the low 600s and pushing toward the high 600s or beyond. Some example places to review are the major bureau reports themselves and whatever credit monitoring tool you already use. Finally, mistakes to avoid. Your credit report review is a repair map. Do not just look at the score and ignore the details. Listen, I understand it feels better to just watch the number, but that is not the work. The work is in the data. A real emergency in credit repair is not a score dropping 4 points 1 week. A real emergency is a collection account, a wrong balance, or a 30-day late sitting there month after month because you never checked. This is going to act as your starting point so that you can actually begin building a stronger profile with some of the other moves we're going to talk about next. Move number 2, a secured credit card. What is it? Pretty self-explanatory. With a secured card, you put down a deposit, the bank gives you a credit line, and that account reports to the bureaus just like a normal credit card. Why do we need a secured credit card? 1. And this is the most important reason, to rebuild positive payment history, which, as you are going to see later on, could save your score and save you a ton of money in the future. Next, it helps rebuild utilization data. Because guess what? You cannot improve revolving credit behavior if you do not have a revolving account reporting. In addition, a secured card specifically is one of the easiest ways to add new positive activity when your file has old damage on it. And of course, my favorite reason, it helps you prove that your credit is getting healthier right now not just that old problems are getting older. How to use it? Very simply, with a secured credit card. You learn how to use a small limit correctly and pay it back on time and in full. This principle alone then extends to things like larger credit cards, auto loans, and future financing. Now granted, you're not trying to spend a lot on it, but you will get into the habit of showing the bureaus, hey, I've got available credit, I'm using it lightly, and I know how to pay it properly. I know it sounds basic, but trust me when I say when you get that first rebuilding card, it teaches you those foundational ABCs of credit behavior so that when your profile gets more complicated later, you are very comfortable with it. The second thing with a secured card on how to use it is making sure you keep utilization low. Do not run it up. A small charge, then pay it off. That's going to dictate whether the card helps you or hurts you. How many points could we expect to gain? And some examples. Let's compare two people. Person A has a 580 credit score. They never rebuilt with a new positive account, so their report is just old negatives and nothing strong happening right now. Person B also had a rough start, but they opened a secured card, kept the balance low, and paid it on time for 12 months. Now let's say both people want to qualify for a decent unsecured credit card or car loan. Person A still looks risky, whereas person B now has recent positive payment history, improving utilization, and a much stronger file. It might not seem like a big difference month to month, but over the span of a year, that positive reporting can be the difference between denial and approval. To me, that's just silly to ignore, because you could have just started rebuilding with a secured card earlier. And by doing that, you could save yourself months or even years of being stuck in bad credit. And there are a lot of secured card options out there. The real point is not the brand. The point is that the account reports, stays open, and gets managed correctly. And finally, mistakes to avoid with secured cards. The first one, most important, do not carry a balance thinking it helps your score. It does not. I thought it was really cool when I first learned that leaving a balance might show activity. But guess what? A balance just means you owe money. It does not mean you're building credit faster. The second thing you want to make sure with secured cards is do not max them out. If you have a $200 limit, do not spend $180 and think that's normal usage. And the final mistake you want to make sure you avoid, make full payments. Never ever miss a payment on the account that was supposed to rebuild your credit. Ever. If you do not have the cash today to pay for that purchase, you cannot put it on that card. Move number 3, fixing your credit utilization. What is it? This is the percentage of your available credit that you're currently using. And more commonly, it's known as one of the fastest score movers on your report. Why do we need it? 2 very simple reasons. The first is you're trying to show the bureaus that you are not overextended, because high balances make you look risky even if you pay on time. The second reason is we're looking out for present day us. Utilization is one of the few things that can change your score relatively quickly. And folks, if we know anything about credit repair, it's that a score boost today is worth way more than waiting around hoping something changes next year. How to use it? Now, this is certainly not financial advice, but this is how I've always approached it because it makes the most sense. When your cards are reporting high balances, pay them down before the statement date, not just the due date. Then, as you progress, keep each card as low as possible. The other thing is you want to make sure at a minimum you stay under 30%. Though the most ideal when it comes to actual score optimization is getting close to single digits. And of course, once you get the balances down, make sure they stay down. You're looking for low reported usage. My personal recommendation? Think light activity. One card may report a small balance, the rest very low or zero. Now let's talk about how many points we could expect to gain. So let's assume you have 3 credit cards with a total limit of $10,000, and right now you're using $8,000 of that. That means you're at 80% utilization. Yikes! On the other hand, if you were able to get those balances down to $1,000 total, you'd now be at 10% utilization. That shift alone can create a major score improvement, especially if high balances were one of your main problems. Now, let's go ahead and assume your utilization was the biggest thing hurting you. Dropping from maxed out to under 10% could mean a very meaningful jump, sometimes within a single reporting cycle. Mistakes to avoid. The first one, don't just pay by the due date and assume that's enough for scoring. But some people pay on time and still let huge balances report. No, you have to go in and actually manage what gets reported. The other mistake you want to avoid is thinking 29% is ideal just because people repeat that online. Under 30% is better than above it. But the real magic is usually much lower than that. And the last thing, when you pay a card down, folks, don't immediately run it right back up. That defeats the whole point. Move number 4. Goodwill letters for late payments. What is it? This is when you contact a creditor and ask them to remove a late payment mark as a gesture of goodwill. And you don't need it to come from a lawyer. In addition, the reason this can matter so much is because one late payment can hold your score down for a long time. Why do we need this move? The first reason, and the most important to me, is that a late payment can be one of the most painful items on an otherwise decent report. The next reason, a goodwill letter is one of the few ways you can directly ask for mercy on a negative mark without waiting years for it to age off. How do you use it? I would approach it with honesty and timing. If the account is otherwise in good standing, if you had a real hardship, and if you've since paid on time, write a clean, respectful letter. Focus mainly on responsibility, what happened, and why you're asking for the adjustment. How many points could we expect to gain? Let's assume you remove a recent 30-day late from an otherwise solid report. That can be a real move. But now let's assume instead of one old late, you had multiple recent lates. Then the impact can be even bigger if you get one or more removed. And if that late payment was one of the main reasons you kept getting denied, the improvement can go beyond the score itself and into actual approvals. And as for where I would start, personally, I would start with the creditor directly. Mistakes to avoid. So, there's actually one thing that's very important here, and that is, you do not want to send an aggressive, sloppy letter when the account is clearly yours and the issue was simply one bad month. Another mistake, but more of a caution, is that you don't really want to expect every creditor to say yes the first time. Sometimes it takes follow-up, sometimes it takes timing, and sometimes they say no. Move number 5, collection account validation and removal. What is it? It's the process of reviewing a collection account, making the collector verify it, and then looking for the best path to get it removed or resolved. Why do you need it? A collection account is one of the fastest ways to drag down a credit profile. Think of it as a giant red flag on your report. The account may be small, but the damage can be much bigger than the balance itself. And sadly, a lot of people, myself included at one point, used to think that just paying a collection automatically fixed everything. Why do you need this move? Because you need a strategy. The money may matter, but the reporting matters too. If the account is inaccurate, outdated, duplicate, or unverifiable, that changes the game. How to use it? So here is the magic with collections. Go ahead first and review the account carefully. Make sure the dates, balances, ownership, and reporting are all accurate. Then, if it needs to be validated, you challenge it. If it's valid and you choose to resolve it, you look for the cleanest path possible, whether that means settlement, deletion negotiation where appropriate, or simply making sure it reports correctly after payment. How many points could we expect to gain? Well, let's go ahead and assume a single collection is one of the biggest negatives on your report. Removing it can be meaningful. Which means, if you were to clean up 2 or 3 collection issues, especially on a thinner file, the impact can be dramatic. And if the collection was stopping you from qualifying for apartments, cards, or loans, that improvement can spill over into real approvals fast. Mistakes to avoid. The first one, paying a collection blindly without understanding how it will report afterward. The second mistake, ignoring the account completely and assuming it will just disappear without affecting anything. And the final mistake, not documenting anything. If you call, keep notes. If you get an offer, get it in writing. If something changes on the report, track it. That matters. The sixth and final move is adding stronger positive data. What is it? It is adding a new line of positive history to outweigh older negatives. That could mean a credit builder loan, a secured card, or becoming an authorized user on a well-managed account. Why do you need this move? For one, it's flexible. Compared to just waiting for old negatives to age, this gives your report something new and positive to work with. The second reason you want to do this is there's no world where a credit report gets stronger without fresh good behavior showing up. Though I will caution, fix the negatives too. Do not think one new account magically erases everything. How to use it? Any positive account you add from here needs to be managed perfectly. As for what to focus on, the exact same philosophy we've been using: low risk, on-time payments, low balances, consistency. Me personally, I like anything that adds clean monthly reporting without creating new chaos. Next, speed. This was my favorite part once I really understood credit repair. See, the key with positive data is that it changes the direction of your file. All you need to know though is this: old negatives tell lenders who you were. New positives start to show who you are now. Now let's talk about how many points we could expect to gain if we added stronger positive data. So let's say you have a thin credit file, a couple of old negatives, and nothing recent helping you. Adding 1 or 2 positive accounts and managing them properly over time can create a very real turnaround. Now let's say you combine that with paying down utilization and cleaning up one collection. That's where you can start seeing the kind of transformation that actually changes what you qualify for. As for where I would start with positive data, I would look at the safest, most boring options. Because again, credit repair should be boring. Mistakes to avoid. The first one, in these rebuilding accounts, you're not trying to look rich. You're trying to look stable. Meaning, do not overuse the account, do not open 5 things at once, and do not care about showing off big limits. We're talking long-term repair here. The second mistake to avoid, and please, I beg you, don't do this. Avoid flashy shortcuts, random trade line schemes, sketchy CPN nonsense, or anything that sounds too easy and too secret. That's stupid. And the thing is, the more desperate the shortcut, the more likely you are to make your file worse. The boring repair moves are actually the ones that let you keep most of your progress. Because again, credit repair is boring. You do the same things over and over and over again. Pay on time, keep balances low, fix errors, add positive history, and in 6, 12, 18 months, your score can look completely different as long as you don't keep damaging it. Folks, this has been the video. These are the 6 credit repair moves you need to focus on if you seriously want to raise your score. Hopefully, you took something away. As always, comments, questions, drop it down below. If you think I missed anything, let me know. And I will catch you all on the next one. Peace, super.